All right, guys, you're welcome to day two of the Forex Without Tears Bootcamp. All right, this is day two. Let's check the live stream to see if we're good to go. Okay, awesome. If you can hear me properly, please use the chat box and type in one in the chat box. If you can hear me properly and you can see my screen, please type in one in the chat box one time for me. Okay, so that I'll know that we are good to go. All right, guys. So we have 8 people on the call right now. More people are going to join us. So we'll get started in about 3 minutes. Okay, so let's wait for people in next 3 minutes. Then we'll get started. So let me write this down here for people. Okay, we will get started in the next 3 minutes. Okay. We had an amazing time yesterday talking about the basics of Forex trading. We learned so much yesterday. We were together for about 2 hours, 30 minutes yesterday. Thank you so much, Mr. Daniel Abraham. You can hear me. Bill Gates Jr., you're welcome, guys. So we have 11 people on the call right now. More people are going to join us. Let's wait for next 2 minutes, 7:05. Then we'll get started into the content that we have for today. Okay, we'll get started. So let me see if I can play a bit of music in the next 1 minute. Then we'll kick off. Okay. So let's enjoy this music. Let me play Billionaire by Tenny. Where's our song? I wanna be a billionaire. Who wants to be a billionaire, guys? Type I'm a billionaire in the chat box. If you want to be a billionaire. I wanna be a billionaire. I wanna be a billionaire. I wanna wake up in a Lamborghini. I want to fly for Santorini, the bonito Sicily. Oh, yeah. If I want money, I do all kinds of crazy. If I want money, I'm all by my shoulder, I'm all by my foya, I'm all by money. I wanna be a billionaire, yeah. All right, guys, that is Billionaire by Tenny. I want to be a billionaire. Every morning when you wake up in the morning, try to speak positive words to yourself. Tell yourself, I'm a multi-billionaire. Okay? Tell yourself, I make $1 million every day. I make $1 million on a monthly basis. Okay? I am super rich. I own a private jet. All right? You want to speak words of affirmation. Once you do that, gradually, you are attracting the kind of lifestyle that you want. Remember, God created the heavens and the earth with his mouth. Okay. And the Bible also makes us understand that as God is on earth, as God is in heaven, we are gods on earth. Okay. So, and we are we are divine beings, we are supernatural beings, we are spirit beings. That means we also have the creative power in our mouth. All right. So speak positive words into your life on a daily basis, and gradually you see the fruition happening. Okay. So regardless of what you are going through right now, you might not have so much in your hands right now, but every day when you wake up, speak what you want to see. Okay, don't speak your circumstances, speak your future into existence. Once you do that, you begin to get ideas, you begin to meet people that will help you achieve your goals in life. Okay, so just a little advice for you guys now. So, welcome, okay, Daniel, Bobby Godswill, Isaac Cruz billionaire, Bobby Godswill, you're a billionaire. Okay, good. You're a billionaire in dollars. Awesome, awesome. We are all going to be billionaires and multi-millionaires. Okay, by the grace of God. Okay, the sky is, there is no competition in the sky. Okay, there's no competition. Everybody's going to make money. Okay, good. So let's get started. We have 15 people on the call right now. Okay, 15 people on the call right now. So let us get started now. Yesterday we gave ourselves assignment. Okay, how many of us did the assignment yesterday? If you did your assignment, type in done in the chat box. Your assignment yesterday was to create an account with a Forex broker, which is FXTM. Then secondly, you had to watch a video on support and resistance. Third, you had to create a free account on TradingView. Okay, then fourth, I sent you a video on how to utilize TradingView. So four things. If you did those four things, okay, because those four things are the things that we're going to build upon today. Okay, if you did those four things, please type in done for me in the chat box. All right, let me know if I've got people following through with this bootcamp. Okay, let's see. Let me have your comments rolling in. Okay, done. Mr. Peter Agbo, done. Good. Mr. Daniel, done. Godwin, done. Bankole, done. Awesome, 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 awesome. So we have 17 people on the call right now. So Oladipupo Fatai, done. Awesome. Good, good. 19 people on the call right now. So more people are joining us, and a lot more people are going to watch the replay session. So I'll just go ahead and talk about what we have for today. Now, today is one of the most interesting days in the boot camp, because this is the day whereby we're going to be delving into the trading strategy. Okay, the things you need to look out for to enter a buy or a sell order. Remember, I told you yesterday that there are two things that we do in the market. It is either we are buying or we are selling. Okay, so today I'll be teaching us one trading strategy, okay, that will help us know the best time to buy in the market and the best time to sell in the market. Okay, I'll tell us where to take our profit, and of course how to set our risk for that trade. Now, in building up to everything we've learned yesterday, the first thing that I'll talk about today is the concept of stop loss and take profit. Now, guys, you have to understand that what I've been teaching us so far is a the best way for you to learn how I trade personally. Remember, I've been trading for over 2 years right now. Okay, I've pretty much lost a lot of money. Okay, and during these 2 years, I've learned a lot of things, and I'm able to get myself into a particular zone mentally whereby I do just some certain things. And in doing those certain things, that is when I started to be profitable. Okay. So what I'm doing right now to trade is the same thing that I'm teaching you right now in this boot camp. So in this boot camp, you are not learning everything supposedly about the Forex market. You are learning what you need to be profitable. Okay, what I am confident about that will make you money, okay, is what you are learning. You are learning how to trade my way, okay, and I'm super confident in my way of trading, and I know that if you get the concept that I'm going to teach you, you will also be very, very profitable. Okay, a professional trader is not somebody that knows everything about the forex market. To me, a professional trader is that person that is profitable. You don't need to know everything. You don't need to be a forex to be profitable. You just need to know that 2 plus 2 will give you 4. Okay, and you just rinse and repeat the process. This is the concept of this bootcamp. My goal is to get you to where the money is. Okay, forget about taking 1 year or 2 years to learn forex trading. Well, that depends on you. If you want to go that route of learning forex trading for 1 year, for 2 years, but I believe that with what I'm doing in this bootcamp, I'm breaking that learning curve. Like, I'm shortening that learning curve in such a way that I can get you to the money as fast as possible. All right. So today we're talking about a concept called stop loss and take profit. Now, everything I'm teaching you is a build up, okay? Build up to how to make the money. So stop loss and take profit. Okay, what does it mean? What do we mean when we say stop loss, and what do we mean when we say take profit? Okay, now remember, I told you in the first market that two things that we do is either you are buying or you are selling. Okay, that is two things that you do in the foreign exchange market. Okay, so when you are buying, so let's take for a buy scenario to explain the concept of stop loss and take profit. Okay, remember yesterday we talked about the confirmations for a buy, and we said we buy at support. When we are buying, we have reasons to believe. Let me make this red to signify support. When you are buying a particular currency pair, what does it mean? You have reasons to believe that the exchange rate of that currency pair is going to increase, it's going to go up. Okay, that's why you are buying. All right. Now, when you buy a particular currency pair, buy. When you buy a particular currency pair here at support, you are anticipating that that currency pair is going to increase. Okay. Now, stop loss is the risk that you are taking on this particular trade, such that when price starts going against you, when price starts going in the opposite direction, it is a level that you want price to get to, and then once price gets to that particular level, okay, you want to be taken out of that trade automatically. Okay, you want to stop your loss, because when price goes against you, you are losing that particular trade and you are losing money. Stop loss. Okay, stop loss is the maximum risk you are willing to take on a particular trade setup, either a buy setup or a sell setup. So when you are buying, remember, you want price to go up, but there are times that price will start going against you. You have to understand that in the foreign exchange market, you cannot win all of your trades. There is nobody that will tell me in this life that he wins 100% of his trades. If you see any strategy online and they tell you that it is 100% win rate, just know that that person is a master scammer. Okay, I've paid for a lot of courses. I've paid for a lot of softwares, a lot of indicators, a lot of programs within these 2 years, and I've not found one trading strategy that is 100% accurate. Okay. When I learned how to trade Forex, I paid about $300 to get started, and every month I was paying about $165 for about 6-7 months consecutively. After that, I started buying courses. I started buying softwares. I bought a software about $500 before, thinking that that software is the holy grail. Okay, there is no 100% strategy. Okay, but what I'm going to show you today after this topic is a strategy that is about 70 to 80% profitable. What that means is that out of every 10 trades that you take, there is, based on statistic and historical data, okay, you are likely to win 7 out of 10 trades, which is a very, very good place to be as a trader. You will not win all of your trades, you will lose some trades, but the good thing is that you will win most of your trades, and your wins will take care of the losses that you have. Okay, so talking about stop loss is the maximum amount of risk you are willing to take on a particular trade setup. So for a buy order, you want price to go up, but there are times that price will go against you. So when you set your stop loss, when price gets to this area below your entry point, when price gets to your stop loss, you'll be taken out of the trade automatically. So the stop loss is an area of the market where you want to be taken out of the trade automatically. All right. Now, take profit is when price is going in your anticipated direction. You are buying this particular currency pair and price is going your way. Take profit is your projection as to where you want price to get to before you are taken out of that trade in a profit. Okay, so when price gets to your take profit, let's label this take profit. Take profit. So when price gets to your take profit level, right, you'll be taken out of the trade automatically. You'll be taken out of that trade automatically. Okay, so take profit is a projection of price in your direction, while stop loss is when price goes against your direction. Price goes in the opposite direction, because as price is going in the opposite direction against you, you are losing money. You are losing money. You are losing money. So when price gets to this particular point, as price is going against you like this, you are losing money. Okay. As it's coming down, you are still losing money. Okay. So your stop loss is the maximum link. Your stop loss is the maximum link. Sorry, maximum is the maximum price point in the market, okay, that you want price to get to, and then you'll be taken out of the trade in a loss. Okay, somebody is asking me for link. That's why I'm saying link. So guys, give me just about 10 seconds. Let me forward the link to this person. Okay, Mr. Laolayinka. Mr. Laolayinka. Okay, now take profit is your anticipated profit zone, is your projection where you want price to get to. Okay, where you want price to get to, and then you want to be taken out of that trade in a profit. So this is for buy order. This is for buy order. Now let us see a scenario. Let's see a scenario for a sell order. Okay, for a sell for a sell order, we have something like this. For a sell order, you have reasons to believe that price is going down. So remember, yesterday we said we sell at resistance. So I'll make this green. Green is our color for resistance. So you are selling, you have reasons to believe that price is going to go down. Okay. Now, so price, you want price to go down for a sell. That means you have reasons to believe that the exchange rate for a currency pair is going to decrease, is going to dump, is going to be going bearish. Okay, it's going to go short. All right. Now, this is your market direction. Stop loss for a sell order. So let me put sell here. We are selling. Stop loss for a sell order when price starts going in the opposite direction like this. You are losing money. You are losing money. You are losing money. So your stop loss is the maximum risk you are willing to take on that trade setup, such that when price gets to that particular point, you want to be taken out of that trade in a loss. You take the loss with your full chest. Okay, so that when price now gets to this point, your stop loss, you'll be taken out of the trade automatically. You have set it automatically. Okay, guys, I'm going to advise you to do something. Okay, now as you go along in this journey, you start understanding some major concepts and even much more than what I'm showing you right now, because it's a gradual process. I don't want to be the one to load you with too many things in 3 days. Okay, I don't want to paralyze you and load you with many information. So I'm only showing you what you need right now. Okay, as you start to practice, you start having questions, and that is why we have a community where you can ask your questions. We have the Telegram group where you can ask your questions, and of course we have the Facebook group where you can also ask your questions. So that's why we have a community, so that we can help you grow and reach very, very high potential. Okay, so for a sell order, stop. Yeah. I was saying that you don't want to enter a trade setup without using a stop loss. Okay, I don't advise it. Okay, always use a stop loss, especially when you're just starting out. Okay, don't go and be saying that you are waiting for the price to reverse. No, don't do that. Remember, you cannot win every trade. So why you trying to win every trade by force by fire? Okay, take your losses with your full chest. The next trade setup, there's a high chance that you will recover what you've lost. So stop loss is the maximum amount of risk you are willing to take on that particular trade. Stop loss. I hope you are taking notes, guys. Okay, don't just come to these sessions and just watch. Your brain is not that sharp. Okay, now take profits is an area of the market in your direction. So you are selling, you want price to go down, you want price to go down. Okay, so your take profit is an area of the market in your direction, in your trade direction. Remember, you are selling, so that that zone will now be your profit zone. When price gets to that zone, you want to be taken out of the trade automatically in profit. So that's your take profit. Once price gets to that take profit zone, that price point, you'll be taken out of the trade in a profit. Take profit. All right. We have 22 people on the call right now. EC, you're welcome. Okay. Good. Stop loss, take profits. We've done an example for a buy order, and we've done an example for a sell order. Okay, if you understand the concept of take profit and stop loss, please type in 2 in the chat box. Type in 2, number 2 in the chat box. If you understand the concept of stop loss and take profit, please type in 2 in the chat box. If you don't understand, that's okay. Don't type 2. Okay. I'll still go over it if you don't understand at the end of the session where we have Q&A. Okay. But if you understand, type in 2 in the chat box. Okay. Let me know if we have more people that understand before I go forward. All right. Stop loss and take profit. Okay. Always set a stop loss for your orders. Either a buy order or a sell order is very, very important. Okay. Now, when you are entering your trade setup, your trade for a buy or for a sell, okay, you'll be asked for your stop loss and you'll be asked for your take profit. Okay. Your stop loss and take profit are areas of the market. Okay. And you simply get your values here. This is your value. Okay, you can see it. So for this one now, stop loss is 117.847. For this one, stop loss, take profit is 116.802. Okay, so stop loss and take profit are price points in the market. They are price points in the market. Okay. And remember, yesterday we talked about the concept of market structure, that price moves from an area of resistance to an area of support. Price moves from an area of resistance to an area of support. As a good trader, your your stop loss and your take profit has to be at market structure, has to be at an area of support or an area of resistance. Okay, you want to put your stop loss and your take profit at reversal zones. Why do we do that? Because we said price moves from resistance to support and from support to resistance. Okay, the next intelligent man. Okay, good one, boss. Mr. Babatunde, awesome. So I've not seen our tools in the chat box. If you understand what is being taught, stop loss and take profit, please type in 2 in the chat box. Type in number 2 in the chat box. Let me know if we understand this concept. Okay, type in 2 in the chat box. All right, awesome. Thank you so much. Mr. Babatunde, Godwin, Peter, Olalayinka, Joseph, Mr. Adeoye. Mr. Adeoye is asking, yes, there's always a recorded version. The same link that you join with every day, the recorded version, the replay will be on that same link. So for day 1, I sent you a link for day 1. That's the link toward the replay. For day 2, I sent you a different link for this class. Toward the replay, simply click on this link again at the end of the class toward the replay. Okay, good. So I see a lot of people understand it. Good. So let us move on. Let's move on. Okay. Now, let us talk about our trading platform. Let's talk about our trading platform. Trading platform. Okay. Now, which platform do we trade on? How do we enter buy or sell orders? Okay. We trade on a platform called MetaTrader 4. Okay. MetaTrader. That's 4. Okay. There's also MetaTrader trader 5. Okay, but I always recommend you to trade on MetaTrader 4. Okay, please don't ask me the difference between MT4 and MT5. Just, I don't know the difference, to be very honest with you. Okay, I use MT4. MT5 is the upgraded version of MT4, but MT4 to me is a lot more stable than MT5. Okay, and most brokers give you are more flexible with MT4 than MT5. It is easier to just use MT4 than MT5. Okay, so this is the trading platform that we trade on. Okay, remember I told you that we are on a platform. This particular platform is called TradingView. Okay, TradingView is our charting platform, charting and analysis platform. So this is where you do your analysis. You do your analysis on TradingView, which is this platform here. And yesterday we gave us assignment that you should create an account on TradingView. So right now you should have an account on TradingView right now. I also sent you a video, a short tutorial on how to navigate TradingView. I hope you watched that video. So right now, everybody here should have information on TradingView platform and how to use this particular platform. Okay, so TradingView is our charting and analysis platform. So once we do our charting and then we do our analysis, okay, and then we see a profitable setup for a buy or a sell, we simply go to our MetaTrader 4 and then we enter a buy or a sell order. Okay, so MT4, you can download the mobile app. There's a mobile app version, okay, and there's a PC version. But the easiest one you can use right now is the mobile app version. So please simply go to your Google Play Store or your iPhone, your App Store, your Apple Store, and download MetaTrader 4. That is the only app that is called MT4. Okay, so download the app that you see that they wrote MT4. Okay, so that's the app that you want to download. And then once you download the app, you want to now log into your demo account. Remember, yesterday I told us to create an account with our Forex broker, which is FXTM, and then you create an account, you create a demo account. Guys, you don't have a business trading on a live account if you don't do your demo. Okay, I recommend it. Do your demo first before you trade live. Nobody should come and cry to me that they are blowing their account. Okay, do your demo first before you go live. Once you are satisfied with your demo account and you are making money using the right risk management on your demo account, you can make money also on your live account. Okay, so guys, here's what I want you to do right now. Your assignment, your first assignment for today is to download the MetaTrader 4 platform on your phone. Okay, download one on your phone. Download one on your phone. Okay, PC version, you can do that, but please later don't ask me for support on PC version. Okay, start with mobile app. Everybody has a phone, not everybody has PC. Everybody has a phone. Download mobile app on your phone on Android Store and Apple Store. Okay, now once you do that, I want you to come to this particular site and then you come to video 6, this website. So let me just right? Copy here. So I've created a video to show you, all right, how to use the MetaTrader 4. Okay. Now, um, I've spent time to create a tutorial on this particular platform, MT4. So this video, so you come to this site and then you watch video 6. You watch video 6. So video 6 gives you a tutorial on how to use MetaTrader 4. So you can screenshot this link and then go to video 6. So this is video 6. I spent about how many minutes? 15 minutes talking about how to use this platform. Okay, how to use it. You can see this is your MT4 and how it looks like. All right, MT4 and how it looks like. So go through this platform, go through this video. I explained to you how to use MT4. I cannot, on this live stream, there's no way I can connect my phone on this live stream. That's why I cannot show you how to do that right now. But this is something that we can do on our own. So MT4 is a platform that we trade on. This is where we enter a buy or a sell order. Okay, we enter a buy or a sell order on our MT4. Okay, so this is how the interface looks like. Okay, let me see. Go to, yeah. All right. So that's your first assignment, guys. Come to this link, watch video 6. Watch video 6. Okay. Watch video 6. Now let us go to the main strategy for today, which is what to look out for in the market before you enter a buy or a sell setup. I'll be teaching you about a strategy called the head and shoulder pattern. Okay? Head and shoulder pattern. This is my main trading strategy, and I'm going to be showing you exactly how to use this strategy to make money in the Forex market. As a Forex trader, you do not need more than one trading strategy to make any amount of money that you want to make. Okay? You'll be doing yourself a major disservice if you are running helter-skelter, trying to gather a lot of strategies to trade. Okay? People that trade many strategies at the same time, they don't cash out in the market. Okay? They are always in a loss at the end of the day. You want to learn one strategy, master that one strategy. That is all you need. Okay, you don't need more than one strategy to make money in the Forex market. Okay, get a profitable strategy, master that strategy, make money with that strategy. Then once you do that, you can now start looking for other systems to trade, other strategies to trade. Okay, but guys, you want to, I've been in this game consistently for 2 years, like day in, day out for 2 years. The charts have been on my face. Okay, so I've tried out a lot of things and I know what works. You don't want to have many strategies. When I got started, I was introduced to at least 10 systems of trading at the same time. Okay, so I got very, very confused trying to get the best one. I was over analyzing, I was paralyzed with analysis. Okay, what one strategy helps you do is to give you a clear focus and to give you, just make you kind of a robotic trader. I know that is where you want to be as a trader. You want to have a system that you follow, okay, to the letter, okay. You want to have a system that you follow. And today I'll be going deep on this heads and shoulder strategy. It is very, very simple to understand. Okay, so open your heart, open your mind to receive this strategy. This is how I trade personally, and it has been very, very profitable. This particular strategy is minimum 70% profitable. 70% profitable. Okay, you can do your research online and just do a research. How profitable is the heads and shoulder strategy? Okay, just do your research just to be sure about what you'll be learning. Okay, this pattern is 70% profitable minimum. What this means is that out of every 10 trades that you take, okay, there's a very high probability that you win 7 out of 10. That means that you will win 7. It means that you win 7 trades, you lose 3 trades. I told you there is no 100% strategy. Okay, the best trader in the world is not the trader that does not lose trades. Okay, it's the trader that wins more trades than he loses. The best trader in the world is not a trader that does not lose trades. Is a trader that wins more trades than he loses, so that at the end of the trading period, at the end of the month or the week, is always going to be in a profit. Is always going to be in a profit. Okay, so that's what I'm going to be showing you today. Okay, how the system works. Now, talking about head and shoulder pattern, the head and shoulder pattern is a repetitive pattern that the market forms over and over again. Okay, it's a pattern that the market forms, that price forms over and over again. The heads and shoulder pattern is a reversal pattern. Is a reversal pattern. A reversal pattern. And what do I mean by this? It means that when we see an uptrend, remember we said that price is, when we see an uptrend, price does two things in the market. Is either price is going up or price is going down. So if you see price going up, that means price is going bullish, right? We say bullish market. All right. Now, before price starts going down, we are going to see a pattern form at this place. Most of the time, at least 7 or 8 out of 10 times, the heads and shoulder pattern is going to form before we see a reversal. Okay, the head and shoulder pattern is what most of the time initiates a change of trend. It is a reversal pattern. The head and shoulder is a reversal pattern. When you see an uptrend, a bullish move, remember, whatever goes up must come down. Whatever goes up must come down. Whatever goes down must come up. So when you see that price is going up, it will get to a point that it will start dumping, it will start going down. Okay, most of the time, before the market starts going down, we are going to see the heads and shoulder pattern form, and that will inform us that there's about to be a change of trend. So once the pattern forms, we are going to enter our order for a buy or for a sell. Okay, the same thing for a downward movement. When we see price going down like this, okay, before price starts going back up, we're going to see the head and shoulder pattern form. It's going to form over here most of the time. You see the head and shoulder pattern form here. It is a reversal pattern. It forms when there's about to be a change in market direction, a shift in market direction, in the trend of the market. All right, that is a head and shoulder pattern. It helps you to spot change when there's about to be a reversal of trend in the market. A head and shoulder pattern is going to form. So it is a repetitive pattern. It forms over and over and over again. That's why we are so confident in the head and shoulder pattern, because we know what it does. It forms repetitively. With the head and shoulder pattern on a weekly basis, you have a lot of opportunities to trade. At least every week, you can have 3 to 5 setups that you can trade on the head and shoulder pattern. Okay, on a weekly basis, minimum. Okay, so how does this pattern work and what does it look like? How does the pattern work and what does it look like? Now, before I talk about that, let me quickly tell you something very, very important. Okay, let me teach you the concept of trends. The concept of trends. The concept of trends. Okay, there are two trends in the markets. Okay, we have the uptrend and we have the downtrend. Okay, we have the uptrend and then you have the downtrend. Uptrend is when price is going up. Downtrend is when price is going down. And how does it look like? And what are the components of a trend? Okay, so a trend looks like this. You see this, a move like this. Sorry. See a move like this. Move up. Then move down. Okay. Yes. That's how a trend looks like, guys. Okay. You never see that price is going down like this. So this for a downtrend. Price does not move in a straight line. No. Price moves in trend like this zigzag format. And what is a component of a trend? This move, this first move down is called the impulse. It's called the impulse move. It's called impulse. This one here. We call it impulse. The first move is called the impulse move. This one here. Okay. This first move here. What's going on? Okay, this first move is called impulse. Then the second move up is called the correction. It's called correction. It's called correction. It's called correction. Correction, which is this one. It's called the correction. And then this third move right here is called the impulse. So what makes up a trend is impulse move, correction, and impulse. Impulse, correction, impulse. That is the anatomy of a trend. Impulse. Right? Impulse. So price moves, a trend comprises of impulse move, correction, and impulse. This is how a downtrend looks like. How does an uptrend looks like? Okay, when price is going up, it looks like this. The first move, you have the impulse move. This is the first move. It's called impulse move. And then you have the next move, which is your correction. Correction, that's the second one. And then you have another impulse move, right? And then you have another correction. And then you have another impulse move. Okay, that is the concept of a trend. So this is an uptrend. My bad. This is an uptrend, guys. It's an uptrend. Okay. Now, I said that to establish the point that head and shoulder is a reversal pattern. Whenever we see an uptrend going up like this, when price is going up like this, just know that this same uptrend that is going up, price is going to reverse and a downtrend is going to start forming. But before the downtrend starts to form, at the top here, a pattern is going to form, which is called the head and shoulder pattern. Okay, when you see a downtrend, this is a downtrend. When you see a downtrend, whatever is going down at a point will start going up. Before price starts going up, at this level, a head and shoulder pattern is going to form before we see the reversal. Okay, the head and shoulder pattern is a reversal pattern. Okay, FX, Mr. Bobby, I'm not sure I should answer your question. Please, someone should help me answer Mr. Bobby G. Gozu's question, please. Okay. Now, let's go straight into this. So, how does the head and shoulder pattern look like? How does it look like? It looks like this. So, let's first of all do for a buy. For a buy head and shoulder pattern. Buy head and shoulder pattern. Head and shoulder pattern. How does it look like? Okay. This is the way the pattern looks like. You want to see an impulse move. Okay. Then you want to see correction. Then you want to see an impulse move. Okay. Then like this. Impulse move. Correction. Impulse. Okay. So this is a completion of the heads and shoulder pattern. This is how it looks like. Okay, so over here is the left shoulder. This is the head. This is the right shoulder. Let's label it because of clarity's sake. Left shoulder. This is the head. And this is the right shoulder. Okay, so this is how the head and shoulder pattern for a buy looks like. For a buy, this is the pattern that we want to form. Okay, I'll tell us where to take our entry in a bit, but let's just screenshot this. This is the way the head and shoulder pattern looks like, just the way your body is structured right now. Your head and your shoulders, you have a left shoulder and you have a right shoulder. Okay, head and shoulder pattern is a form of geometry. Okay, and our body is geometric. Okay, now how does a cell head and shoulder pattern looks like? Cell is simply the inverse. Cell heads and shoulder pattern for a cell. Cell heads and shoulder pattern. How does it look like? It's the same concept, but now we are just reversing it. So let me make this green. Okay, so you want to see an impulse move. You want to see the correction. Correction. You want to see an impulse move. All right. You want to see correction. Impulse move. Sorry. You want to see correction. Then impulse move. Okay. This is the head. This is the left shoulder. And this is the right shoulder. Okay. This is the right shoulder. Now, so this is how the cell head and shoulder pattern looks like. This is how the buy head and shoulder pattern looks like. So this is the pattern that we are going to be spotting with our eyes in the market. I'll show you how it is forming on a live chart very, very shortly. But understand the concept first and understand the pattern. Okay. This is the pattern that we want to be trading. Okay. How do you know a person's behavior? Okay. How do you know the behavior of your friend, of your parents? Okay. Check out their patterns. How do they behave in the past when some certain things happen? Okay. Check out their patterns. That's why this head and shoulder pattern is very, very profitable, because there's a lot of repetition that happens in the markets using this head and shoulder pattern. Okay, so now screenshot this particular thing right now. So let me give us about 10 seconds to screenshot this. This is a pattern that we are going to be spotting. Okay, it's it happens a lot. Happens a lot of times. Happens a lot of times. And at the end of this session, you'll be able to understand the system properly. I'll break it down in a way that you'll be able to make it happen and start doing your demo trading as from next week. Okay, good. So we should have done our screenshot right now. So now let me now break this particular pattern down and then show you how to do your analysis and where to enter for a buy or for a sell. Okay, so I'm going to erase everything right about now, then start drawing again and show you how to do your analysis and enter a setup. Okay, so let's remove everything. Let me check the live feed and see what's going on. Thank you, Mr. Babatunde Odeshino. Okay, thank you, Mr. Godwin. Thank you for answering his question. I'm so grateful. Okay, now how do we enter trade setup? When you see okay, so let us start with a buy setup. Okay, when you see an impulse move, a move down, a strong move down, a very clear move, you see it's called an impulse move, a strong move downward, impulse move. And then you see another move in the opposite direction, a very strong, is visible to the eyes, like anybody can spot it, visible. So impulse, correction. What's going on? Okay, impulse, correction. You want a correction, and then you want another impulse move. When you see this kind of move take place, impulse, correction, impulse, at any point in time, when you see this kind of move happen, the first thing you want to do is to draw out your support zone, because this is a downward movement. You are concerned for the head and shoulder pattern, you are concerned about the support. So this is a support right here. Remember, yesterday we talked about the concept of support and resistance, and we said support and resistance are reversal zones in the market. And we made ourselves understand that support, we can also call support a floor. So when price gets to floor, most of the time it will bounce back. So on this particular move, this is our support. So I'll mark out my area of support once I see once I see a trend like this, a downtrend. This is my area of support. So I mark it out. Okay, I'm going to make it red. Or let me make this green. Okay. So this is my area of support. I mark it down. Once I do that, I am now just going to be waiting patiently. Now, before I make my point, let me bring our attention to something that I talked about yesterday. So yesterday, remember, we talked about the condition for a buy and the condition for a sell. Don't forget, remember, that's the foundation. The condition for a buy and the condition for a sell. We said that for a buy to happen, you want to spot an area of resistance. So this zone here is my resistance. For a buy to happen, I want price to break my area of resistance. Once an area of resistance has been broken by price, it is no longer a valid resistance. So it now turns to support. When I see a break of resistance, I want to see a retest of that newfound support. So that zone should serve as support. So at the close of the red candle on this particular zone, I want the candle to close here. Once the candle closes, I want to take my entry for a buy. That's why we said yesterday we buy at area of support. We buy at support. Now, for a sell to happen, you want to identify an area of support. An area of support. So this is our support area. Once you identify an area of support, you want price to break an area, your area of support. Once support is broken, it is no longer a valid support zone. It is now a resistance. So once that happens, you want price to retest your newly found resistance. And when price closes, this serves as a resistance, and a green candle forms here and closes at this zone, you want to take your entry for a what? Sell. That's why yesterday we said we sell at resistance. Okay, so you buy at support and then you sell at resistance. So it is that knowledge of yesterday's class, this confirmation, that we are bringing into today's class. So now, looking at this particular setup, when you spot an impulse move, you spot the correction, and then you spot the impulse move down, you want to draw out your support zone, this zone here. Now, you are now going to be waiting patiently. Forex market is a game of patience. Okay, you have to be patient, guys. You have to be patient. You have to be very, very patient. Okay, patience in Forex market is a great virtue. Is a great virtue. Very, very great. Okay, money moves from the impatient to the patient in the Forex market. Okay, maybe you should write that down. Money moves from the impatient to the patient in the Forex market. So once this kind of move happens, you are going to simply wait for price to come back up. You want price to now break this zone. Once price breaks this zone, what do you wait for? You wait for a retest. Remember our confirmation for a buy. Once that retest happens, you take your entry for a buy at the close of the candle. The candle must close. It must close at this zone here. So you buy at the right shoulder. What's going on? We buy at the right shoulder. One second. Okay, so we buy at this, and this, like we learned, is our right shoulder. We buy here. And we want price to go up. Okay? We buy here. Now, let's do a scenario for it. So remember, this is your left shoulder. This is your head. And this is your right shoulder. We buy and sell at the right shoulder. The right shoulder is your area of entry. You want price to get back to this zone that you drew from your left shoulder. Okay, so the zone that you drew from your left shoulder, that support zone, is very, very important. You want price to come back to that zone. It has to be equal. Okay, you want price to come back to that zone. Once price gets back to that zone, you take your entry for a buy. You buy at right shoulder. So this is now your right shoulder. You buy waiting for the completion, okay, of the head and shoulder pattern. You buy, and then most of the time price will start going up in your direction. We'll look at a few setups today before we go. Now let's see how for a sell looks like. Now for a sell pattern, you are looking for a move upward. Let me change this to yellow. For a sell, this is an impulse move, is a strong move up. Then you want to see correction, move down, then another impulse move. Once you spot this kind of pattern happening, this is a trend, guys. This is an uptrend. Okay, impulse, correction, impulse. Once you see this kind of pattern form in the market, you want to mark out this is a resistance zone, guys. Resistance. You want to map out your resistance. Okay, just mark it down. Wait for the market. Set trap for the market. Okay, you are simply now waiting for price to play according to your analysis, according to your strategy. You are not guessing. You are taking a calculated entry for a buy or for a sell. So this will not be your proposed left shoulder. There are times that price will not come back. Oh, don't think it's every time that price will come back. It's not every time. It's not every time. There are times that price will not come back here at all. Price will just keep going up. To just get to this place and then start going back up. It's not every time. But you are waiting. Just set the trap down. So when price, you are waiting for price to break this zone. Once that break happens, you are simply waiting for a retest. You want a retest to happen at this same zone. It must touch, it must touch the zone and close at the zone. Okay, once the candle closes, you want to take your entry for a sell. You sell at the right shoulder. Sell. So when you sell, most of the time you see that price will start going down. Price will start going down. Okay, this is your left shoulder. This is the head. Okay, and this right here is the right shoulder. We sell and buy at the right shoulder. We sell and we buy at the right shoulder. Okay, good. Now let us go straight to the market. Before we go to the market, let me see if I can kill this bird. Kill two birds with the same stone. Is that the way they say it? Okay, so we buy at right. We sell at right shoulder here, over here. Now, where do you put your stop loss for this trade, and where do you put your take profit? Where do you put your stop loss, and where do you put your take profit? Remember, we are buying. So let me start with this buy scenario here. Your stop loss is a few pips below your head. below this head, not your head, this pattern. Okay, your stop loss is below your head here, so about 2 to 3 pips below. This is where your stop loss will be. We say it's red. Remember, on this setup we are buying, so if price goes against us and it gets to this particular point, we will be taken out of the trade in a loss. We accept our loss with our full chest. Okay, now that's our stop loss. Where do you put your take profit? Your take profit has to be above your neckline. This is your neckline. These two places. This is your neckline. Your stop loss has to be above your neckline. Okay, it has to be at the immediate reversal zone above your neckline, so somewhere around here. That would be where your take profit will be. Remember, I told you that price moves from structure to structure. Price moves from structure to structure. What does that mean? Price moves from an area of support to an area of resistance. Price moves from an area of resistance to an area of support. That is market structure for you. When you find a support, there is always a resistance somewhere. When you find a resistance zone, there's always a support somewhere. So price moves from support to resistance and resistance to support. So your take profits and your stop loss zones for a good trader has to be at structure areas. So your take profit has to be above your neckline. This is your neckline. It has to be above the highest neckline, above the highest neckline. Okay, so you simply look to your left and then the most recent resistance. Okay, because price is coming from support, remember. So your entry point is an area of support. You are simply going to look for the area of resistance that price is going to go to, and that will serve as your take profit. So your take profit level for a buy is the immediate resistance zone above your neckline. Looking to your left, your TP for a buy is resistance, because price, you are buying from an area of support. Remember, we buy at support. We buy at support, and when price is coming from an area of support, most of the time it's going to end at an area of resistance. That is why we are putting our take profits at resistance area. So which resistance area are you looking for? You want a resistance area that is above your neckline. This is your neckline here, these two places above your neckline. The immediate resistance zone, the immediate reversal zone above your neckline. Okay, I am emphasizing because I want us to understand that concept. Okay, so this is for a buy order. Don't worry, we'll do practicals in a bit. This is the only thing we are doing for today. So in the next 30 minutes, I'll be looking at different setups for you so that you'll get the concept. Okay. Now, for a sell scenario, where do you put your stop loss? Your stop loss is a 2 or 3 pips above your head. This is your stop loss. Top here. Let's make it red. All right, this is your stop loss. This is your entry point. Where would be your take profit area? Remember, we are selling at resistance, right? we sell at resistance. So that means our take profit has to be at a support area, because we know that market moves from structure to structure, from zone to zone, from resistance to support, support to resistance. Because we are selling at resistance, we have to look for an area of support, because that's where price will most likely get to. Okay, so our take profit based on a sell order is the area of support below your neckline. This is your neckline, guys. Below this point, this is your neckline. Okay, this is your neckline. Okay, so below your neckline, you look to your immediate left, immediate past. Where do you see the most recent support? So it has to be somewhere around here. So that will be your take profit. That will be your take profit. Or your take profit. So now let me allow us screenshot this. So after this, now let's go to the live chart and see exactly what I'm talking about. Doing that, you'll be able to spot exactly what we are talking about. Okay, so let us screenshot this so that you can understand where to put your stop loss and where to put your take profit for a buy order or a sell order. Okay, someone said he was blind, now you can see. Yeah, I hope you can see the money in the market. So let's go to the live market and check out what happened. Okay. Okay, good. This is what I'll do, right? I should have subscribed for the premium package of TradingView. With TradingView, I can actually, for the premium plan, I can actually do a replay, okay, and move price and do a simulation for like a live market. But this is what happened in the past anyway, so let me do it what we have. Later on, we will do more things. Now, guys, every Monday on our private Facebook group, we do Q&A session. Every Monday, 7 p.m. Nigerian time, we do Q&A. And of course, we do live analysis also every Monday. Every Monday, I also give out trading ideas. Some people call it signals, but I call it ideas, telling you what to trade. Okay, on Monday, I gave out 3 signals, 3 ideas on Monday. 2 have hit take profits, the other one did not trigger. The previous week, I gave out 3 trading ideas, all 3 hit take profit. So you don't want to be missing those sessions where I'm giving you setups to trade live. And also, when you have questions, you can come on the live Q&A session and ask your question so that you can master and solidify what you're learning in the bootcamp. Okay, good. So looking at this particular chart right now, I can spot a heads and shoulder pattern. And how do we start spotting a pattern, and how do we make our analysis and wait for the pattern to happen? Okay, I gave out this particular trade idea on Monday last week, this Monday that just passed, and it triggered. So I can see something like this, guys. You can see a move up, you can see it, and then I can see a move down. You can see, right? And then I can see, so this is our impulse, correction, then impulse. And when you see something like this happen, what do? You draw your zone from, this is a resistance zone, right? So this is not your proposed, this not be your proposed left shoulder. Okay, so I draw my zone here, my resistance zone. I draw it to the front, to the current market price. So at a point in time, price was here. So let me use this. So let's assume that all of this has not happened. Where that box is, let me make it, what can I use? Good. So let's assume that all of this has not happened. Where I shaded it, this brown part has not happened in the market. So price was just here. Okay, price was here. Now, once I draw this, I'm simply waiting for price to break. This is my zone that I drew from my proposed left shoulder. So I'm waiting for a break. I want a break to happen, and I'm waiting for a retest of this zone. Okay, so now the break happened. It happened here. When that break happens, I'm still waiting. Guys, I'm not chasing the market. We are waiting for the market to play according to our strategy. Okay, and then gradually, the next thing we are waiting for is we want to see a retest. We want price to come back to this zone. We want price to come back to this zone. Okay, and that took a while. So gradually, you can see price started going up gradually, Finally, price came back up. Let me make this chart bigger. Finally, price came back up. And then we saw a retest of this zone. As you can see, a retest of this zone is what you're looking for. Once that retest happened, at the close of the candle, you take your entry for a sell. This is a sell pattern. Remember our confirmation for a sell. Break of support, retest, resistance. So this is a candle that you take your entry from. At the close of the candle, you take your entry for a sell. Okay, so let's delete this. Where do you put your stop loss, and where do you put your take profit? We said you put your stop loss above the head, about 2 or 3 pips above the head. Let's say somewhere around here will be your stop loss. Let's make this red. Okay, where do you put your take profit? Now, because we are selling from an area of resistance, remember we sell at resistance, so we are selling here. Now, our take profit has to be at support, because we know the way market moves. The market moves from zone to zone, from resistance to support, from support to resistance. Okay, we simply look for the area of support beneath our neckline. This is our neckline here. This is your neckline. Okay, this point. Looking to your left, we can see our support here. So this is the immediate support. The first support that you see is your take profit zone. The first support before the neckline. Okay, what happened in the past? So over here will be your take profit here. And as you can see, price started going our way. First and foremost, when you entered here, price went against us. myself, like I was afraid that it was going to hit my stop loss. You can see price was going up, and then it came very close to your stop loss. It came very close, just about 10 pips to hit your stop loss, and then it started going down. Okay, it started going down. So price did not hit your stop loss. It started going down, and then started going down. It's going down. It's forming these red candles. That means it's going down. Then finally, price hits your take profit. It hits your take profit on this particular candle. On this candle, you can see you got wicked into your take profit. The wick, okay, got wick, and if you did not enter here, it would have entered here. Okay. We have 19 people on the call. Okay. Let us find another setup for let's find a buy setup. Let's find a buy setup. Which one did I take? I think I gave a setup for a buy also. USD card. Is it USD card? Yes, USD card. So let me erase all of this. Okay. So this is a setup for a buy. This is a buy setup. I can see a move happen. Okay, this is an impulse move. This is correction, and this is another impulse. When I see this kind of moves happen in the market, what do I say you should do? You draw your zone, you draw your support zone. Draw your support zone. Simple. This is my support zone. I draw it from the wick to the close of the candle. Okay. Draw my support. Draw your support zone. Perfect. Okay. I think I even entered early. Now this trade setup is going to trigger. It has triggered. So now once you see this kind of thing happening, you are now simply waiting. So let me draw my box. So I'm going to assume that all of this has not happened. Let's assume it has not happened. So let me make this blue. So this area, this blue area, has not happened. Now I'm simply waiting for break this zone, and then I want price to retest. Once I see a retest of this zone, I take my entry for a buy, right? That is the setup I'm waiting for. So let us see what happened later in the market. Okay, market started going up, but as you can see, it started forming a lot of rejection candles, a lot of smaller candles, and price is still within. Price has not broken this zone yet. It has not broken it. I need a candle that I want a break of this zone, but no breaks of the zone yet. Price is still within that zone. Okay, price is still going. I'm still waiting patiently. Remember, the forex market is is a game of patience. Money flows from the impatient to the patient. Okay, so you wait, you wait, you wait. Okay, finally, I see a very large break. You can see, so the break of this structure happened on this particular candle. So when that break happened, I'm simply waiting for a retest. I want a retest. You can see price came here, and then I want price to come back to this zone. I want a retest of this zone. And as you can see, that happened on this candle. Okay, at the close of this candle is where you now want to take your entry for a buy. For a buy, guys. So let me remove all of my arrows. So where do you put your stop loss and where do you put your take profit? Okay, we have entered the trade here. This is still a valid setup for you to enter on your demo account when the market opens on Monday. Okay, our entry was triggered on Friday about 12 p.m. on Friday. Okay, that was when this particular setup triggered. Not 12 p.m. To 6 p.m. thereabouts. Okay, 6 or 4 p.m. on Friday. Okay, now where do you put your stop loss? You put your stop loss below your head, over here, about 2 or 3 pieces below. This is where you put your stop loss. Okay, where do you put your take profit? Okay, you put your take profit above your what? Above your neckline. And where's our neckline? These are our neckline. These are neckline. This place. So above this zone, so we are looking for the resistance above this zone, because price is coming from an area of support. We are buying here. So price is going from an area of support to an area of resistance. So where is the immediate resistance? Above our highest neckline. Okay, we simply look to our left. When I look to my left, my immediate past, above my neckline, the immediate resistance is here. This is the immediate reversal that acted as a resistance. So over here is where I'll put my take profit, at this place. So I'll make this green. So this will be my take profit. Okay, so you can enter this trade when the market opens on Monday on your demo account. Okay, this will be your stop loss and this will be your take profit value. You can see the values here. Your take profit will be 1.31888. Your stop loss will be 1.27887. 1.27887. Okay, let us look for another setup so that we can understand this concept properly. Okay, let's find one that I entered last week. So NZDJPY, I was in this trade last week. It was a very, very powerful move. So let's spot ours. Now you are looking for impulse move. Then you want to find a correction, impulse correction, and then another impulse. So this happened here. When you see this kind of thing happening, what do? You spot your area of support. This is your support zone over here. I simply mark it out. I mark it out. I now wait for market to play out. Okay? So I'm going to assume that all of this has not happened. All of this here has not happened yet. So now, what am I waiting for? I'm waiting for price to break this zone so that it can form my right shoulder. So this is my proposed right shoulder. This is my proposed head. So now I am waiting patiently. I'm waiting patiently for price to what? I want price to break this zone. I want price to break this zone. And then I want price to retest back this zone before taking my entry for a buy. All right. So now let's see if that was what happened. Let's see if that was what happened. Okay, so let's move this. You can see price started going. It did not break the zone yet. So we were just being patient. Remember, this is the 4-hour chart, whereby every candle represents 4 hours. So you're like waiting for about a day or 2 days. Remember, you gotta be patient. You have to be patient. Okay, so this is a 4-hour chart. So we're waiting patiently, and finally, August 24th. Okay, about 8 a.m. Nigerian time, London session, we found the break. So the break happened on this particular candle. On this candle was the candle that broke our zone. No, this candle is a candle that broke this zone. Once that break happened, we are simply waiting for a retest. We want a retest. And that retest happened on where? Happened on this candle. So at the close of this candle is where we take our entry for a buy. So we entered a buy on this particular candle. On this candle, where do you put your stop loss? Your stop loss is below the head, a few pips below your head, somewhere here. Let's make that red. All right. Now, where do you put your take profit? You put your take profit at above your neckline. This is a buy order. We are buying at support. So we are waiting for price to get to a resistance area. So above our neckline, this is our neckline. This place from here, this is our neckline. Okay. So above the highest neckline, we are looking for the immediate and the most relevant resistance zone. Looking to your left, when you look to your left, you can find that this is the immediate resistance over here. You can see price, there's a rejection here, reversal here. So this will be our take profit. So call this green. So let's see if price go to our take profit. So We entered the trade setup, price started going our direction, started going gently, started going. Finally, our take profit was hit, and price still kept moving and started going to heaven. Okay, price started going to heaven. You can see very soon a pattern is about to form here. A pattern just formed. We have the head and shoulder pattern. Okay, so that's how it was, guys. So this is the time where you ask questions. If you have any questions right now concerning the head and shoulder pattern, please ask and I'll make clarifications. We have about 15 more minutes to the end of this session. We have been teaching ourselves this strategy for 1 hour 47 minutes right now. So we have 15 minutes to the end of the session. If you have any questions, please ask in the chat box right now. If you have any questions, please ask in the chat box right now. Okay. Okay, so let me check the chat box for any questions, okay? This pattern is a very, very 40% accurate. Okay, 70% over 70% accurate. You can be very, very confident and enter the trade setup with your full chest. Okay, knowing that you make money at the end of the day. All right, so in the absence of questions, I'm going to assume that we all understand this. Okay, someone is asking, he says, if I can't wait and I have done my analysis, is it okay to use a pending order? Okay, a pending order is your buy stop, your buy limit. For the head and shoulder pattern, I don't advise you to use pending orders, okay? Because there are times I don't use pending orders, guys, because there are times that price will break on your, so this is it. Let me show you something. For your right shoulder, for example, now for a buy setup, you want something that looks like this: a break and a retest, right? But there are times that the first retest is going to break this zone and close below your zone. Okay, when this kind of retest happens, whereby the first retest of your zone breaks the zone and closes beneath the zone, it renders that right shoulder invalid. Okay, you don't want to enter that trade setup. But if you have placed a pending order here, you would have entered that trade setup and then you'll be in a wrong setup, and then most of the time price will start going against you and hit your stop loss. Okay, let me show you an example. I think I saw, so I think it's CAD JPY. CAD JPY. CAD JPY. Good. So this is CAD JPY. Let me give you what I'm talking about. So for CAD JPY, we saw this setup. Okay, you see the up movement. That's the impulse move. We can see the correction, and then we see the impulse. Okay, once this happens, what do you want to do? You want to draw out your resistance zone here. Okay, so let me erase this. So when I draw this zone, from here to here. Now I'm simply waiting for a break, right? A break and a retest. Okay, these two candles have not touched this zone, so I won't take my entry yet. I'm waiting for a retest of this zone. I want price to close. I want a break. Let me make it bigger so that you see what I'm seeing properly. Right, I want a break, which the break happened, then I want a retest, and that retest should stop at this zone. Okay, and this candle is the first candle. This candle is the first candle that touched this particular zone, but it did not stop at this zone. It did not serve as a resistance. It was broken, right? When this happens, it renders your right shoulder entry useless. You don't enter when your right shoulder is broken. The first candle that touches your right shoulder has to stop, has to respect that structure. When it breaks your structure, it's no longer valid. Okay, but if you are gone ahead to place a pending order, let's say somewhere around here, you would have been in this trade setup, okay, and then you'd have been in a lot of drawdown, okay, and the market would have been playing with emotions. You can see market started going sideways, okay. So that's why I don't advise you use pending order. I know the best thing would be for you to use a pending order, but try and avoid. It's still going to be profitable for you, but there are times that when you use a pending order, you would be in a wrong setup. Okay, so maybe when you enter a trade setup using a pending order, always check periodically to know if you are in a right trade or not. Mr. OK Daniel, did I answer your question properly? Mr. Ola is asking, what if there is no wick at the left shoulder? That's fine. You simply draw it like that. If there's no wick, just map out the close of the candle there. Mr. Olalayinka, I draw my support and resistance line. I draw it using my rectangle. That's just my own preference. I use my rectangle to draw my support resistance line. So I pick, so this is where I draw it. 1 second. Now, looking at this particular move up now, this is a resistance zone. Now, the zone, support and resistance is not a point in the market. It is a zone. So looking at this move right now, this is a resistance zone. The zone you want to draw is the highest point of that move. So let's use our horizontal line. The highest point is the wick, the highest price, that's the wick. And then the close of the candle here, the close of the candle here. So that's how I draw my support, and I simply use my rectangle tool to map it out. Okay, so that I draw it. So the highest point, that's the wick to the close of the candle. The same thing we do for resistance over here, from close to the wick. All right. He's asking, For my stop loss, what if it is too far from resistance or support because of the distance of the head and low towards my neck? Yeah, so tomorrow I'm going to answer your question, Mr. Okay Daniel. Tomorrow is where we talk about risk management. Guys, if you're on this call tonight, you don't want to miss tomorrow's session. Tomorrow's session is if you learn about a good strategy and you don't have good risk management, okay, you will not be profitable. So tomorrow I'll be showing you exactly what it means by risk management, okay, and how to enter the right setup, how to know the right lot size to use per trade. Remember yesterday we talked about different lot sizes. We talked about the mini lot, about the standard lot. So based on your account size, what is the best lot size that you should use? We'll talk about everything tomorrow, okay? And Mr. Okay Daniel, your question, I'm going to answer it tomorrow, okay? Mr. Lumide Aladeshion is asking, can I please retake the buy setup? Okay, I'll do one buy setup for us. Okay, which one can I use? Let me see if there's a setup on GBP USD. Bye. Let me find a perfect setup for us. This is not an uptrend sense. Okay, good. So this is a setup on GBP USD. So this is, if you can see an impulse move, we can see correction, and we can see impulse. When you see this kind of setup happening, what do? You simply mark out your support zone. Okay, map out. So this is support. Let's mark it out. Okay, once you mark it out, what are you waiting for? We are waiting for price to what? To break this zone. You are looking for a break of this zone. You want a break of the zone, and then you want to see a retest. A break and retest. Once that retest happens, you take your entry for a buy at this zone. Okay, so now on this particular setup, we have multiple entries actually. So your first entry is this. This is a break of this zone, this candle, and then this red candle is a retest. Okay, is a retest. Price was just on that line, on that zone, the wick. Or if you wouldn't take this, you can take this. All right, this will be the retest. When you draw your zone up, so the break and the retest. So the retest happened on this particular candle. You take your entry for a buy on this candle. This is where you put your stop loss. Let's make it red. Okay, where do you put your take profit? Your take profits are above your neckline. So, and this is your neckline. This zone. From here to here, this is your neckline, this particular place. So above your neckline, you look to your left because you are buying from an area of support. That means your take profit has to be an area of resistance. Right? So you look to your left above your neckline. This is your neckline. Above your neckline, where is the immediate resistance zone, which is this particular place above here. This zone is your take profit. So this is your take profit. And as you can see, when you entered here, price went ahead to hit your take profit. I hope that answered your question, Mr. Olumide. Okay. Any other question before we call it a day? Yes, sir. Direx Empire, I trade reversals. Okay. I trade reversals. Okay. To know more about that, Mr. Direx, you want to be joining our weekly Q&A sessions. Okay. So today we are only talking about one trading strategy. Okay. Master this trading strategy. The heads and shoulder pattern most of the time is what initiates a trend. So you're asking a question right now. If you have entered the market with the heads and shoulder pattern, you won't really need to enter when a trend is already happening because you had entered at the beginning of the trend. Direct Empire, do you understand? Okay, what time frame is best to trade this strategy? Okay, the time frame that you trade with depends on you. But personally, I told you yesterday that I trade on the 1 hour time frame and the 4 hour time frame. Okay, now there are different kinds of traders. You have people that will call scalpers. So scalpers are people that trade on the 5 minute chart, 5 minute chart majorly, and maybe 15 minutes chart, because they are looking for quick moves in the market. They don't like to hold trades for long. Okay, then we have people that will call intraday traders. Intraday traders. Okay, these guys trade on the 30 minute multi-hour chart. Okay, they are willing to hold trade for a few hours, but within the day, they want to be out of any trade setup within the day. Okay, then we have people that we call swing traders. So swing traders, they trade on the 4 hour chart and the daily chart. So these guys are willing to hold a trade setup for several days, for like 3 days, a week, or sometimes 2 weeks. They are fine with that. Okay, these guys are very, very patient. Now, we have people that we call position traders. These are people that trade on the weekly chart and the monthly chart. Okay, these people are people that can hold trades for months and weeks, for years. Okay, these are people that have Bitcoin since last year or 2 years ago. Okay, they are position traders. They buy at the lowest point of the market. They have a very long-term view. Okay, so the time frame that you trade on depends on you. The pattern is profitable on every time frame, but personally, I want to recommend that you trade on the 1 hour and the 4 hour chart. Okay, that's because that's where I trade on, because I only check my charts, hourly and every 4 hours. But if you have the time, your time at your disposal to be checking your charts 15 minutes periodically, you can check the 15 minute chart. But I recommend the 1 hour and the 4 hour chart. That is my recommendation. Okay, NZD USD 1 hour, Mr. Olala Inka. Let's check NZD USD 1 hour. 1 hour, let's see what's going on. Fantabulous. Okay, Mr. Olala Inka, I think you get this concept. So, this is a pattern that is forming right now. Thank you so much, Mr. Olala Inka. So, let's use this to teach us. This is a pattern that's forming right now. We can see a move down, impulse, see correction, and then you see impulse. Now this is our proposed left shoulder. So what do? We simply draw our area of resistance, area of support, or support. So these are support. Okay, now I'm simply waiting for price to break. I want a break, and then I want a retest of this particular zone. Once price gets back to this zone, I take my entry for a buy. But now price has not gotten to this zone yet. We have seen that price broke this zone. This green candle, this blue candle broke our zone. Now we are waiting for this move to come down here. Once the candle comes down to this zone, once there's a break here, once there's a break here, once there's a touch and close of the candle here, we take our entry for a buy. Okay, why are we confident? Because for some time, based on this time frame, we have been on a downtrend, and we know that a pattern called head and shoulder forms when there is about to be a reversal. Okay, so once price gets here, you take your entry for a buy. You put your stop loss here. Put your stop loss here. Where do you put your take profit? Your take profit has to be above your neckline. This is your neckline. This is your neckline. These 2 points, the neckline. So above my neckline, the most recent resistance zone is this place. So that's where I put my take profit, at this resistance. Okay, this is also a trade setup you can enter as from next week. So this should probably trigger on Monday or Tuesday. Okay, is that clear, sir? I said, Mr. Bobby G, I trade on the 1 hour and the 4 hour charts. Okay, there's no best time, depends on your kind of person. Okay, I'll send us the Telegram channel after. Can fundamentals affect the setup? Yes, of course. Okay, but I don't do fundamentals because fundamentals will only either help my setup hit take profits or hit stop loss, whichever way. Okay, my mindset when it comes to entering trade setup is that I cannot win all my trades. So why am I trying to be perfect? Okay, so I trade the pattern. I don't care about fundamentals. But if you are a fundamental person, you can attach fundamentals to your setup and do your thing. Okay, is it possible to take profits before it reaches the Well, I'm going to advise you tomorrow. I'll talk about trade management tomorrow. So, Biggest Junior, don't miss tomorrow's session. I'll talk about why you should not move your take profit. Okay, talking about risk management tomorrow. You don't want to be those people that close trades out of fear. It will not favor you. Okay, once you have set your take profit and your stop loss, leave it there. Leave it there. Okay, leave it there. Okay, leave it there. So join tomorrow's session to understand risk management properly and trade management properly. Okay, so guys, we are 15 minutes past our normal session. All right, so let's have a remarkable evening. Remember to do your assignment. Your assignment is to download MetaTrader 4. Download MetaTrader 4 on your phone and then log in to your demo account or your live account. Okay, your demo account, you have created it on FXTM and they've given you your MetaTrader 4 details. So you simply log in to it so that you can start trading. Watch this video to show you how to enter buy setup or a sell setup. Okay, so that is your assignment for tomorrow, for before tomorrow. So tomorrow we are going to build on everything that we've learned in these 2 days. So tomorrow is the grand finale. You don't want to miss tomorrow. Okay, it's it is highly expedient that you make time tomorrow. Okay, I hope we learned a lot in this session. Okay, I'll see us tomorrow. Let's have a remarkable Saturday night. Bye bye, guys. Cheers.